Hey, Jonathan, NorfolkFXTrader.com. And in this video today, I'm going to be talking about the differences between supply and demand and support and resistance. So if you're currently a support and resistance trader, I'm going to show you this video, and by the end of this video, you're going to know why you should be trading with supply and demand instead. And I've also got a treat for you to understand why you are losing your trades. So as I said in the intro of this video, we're going to be talking about the differences now between supply and demand and support and resistance. So I'm briefly going to go through that now on the whiteboard, and then we're going to go through in the second part of this video on some price charts so you can actually apply these techniques as I show you on your charts as well. So the first thing we need to go through is the basics of understanding the two differences between supply and demand and support and resistance. Now, if you haven't already been through the first videos with my channel on supply and demand, then I suggest going through that first video on how to identify zones of supply and demand and how to easily draw those zones of supply and demand. This is going to help you to understand why we look at supply and demand in a different way compared to support and resistance. And by the end of this video, you are going to know exactly why you're losing your trades, which is the most important thing to this video. So if you're enjoying this content today, don't forget to give me that thumbs up, because it's going to help me to know you're enjoying these videos. So the first thing let's go through is an area of a range bound market. This is our typical area when we see support and resistance. This is our resistance, this is our support. You've been taught as a retail trader with support and resistance, this is your buy area and this is your sell area. Now what I'm going to share with you in this video is why you're losing trades. This typical example, let's go through this in more detail. Sometimes you're going to see this swing pullback to this area of previous resistance to act as support. Typical market structure break. And you may be looking for buy here to go long. Now you may have got in this buy and you started to go in your direction, to then find the market all of a sudden drops down, takes your stop out, but then does this, continues on its way. You're frustrated because you've got into a trade, the right direction, you've lost it, and you've seen it gone your way. Now that is more annoying to you as a trader than actually losing, because you're thinking, hang on a minute, I've just been stopped out and I could have made all that profit. Why? Why market? Why have you done this to me again? No, it's not the market's fault. It's unfortunately you as a trader have been taught the wrong concepts. In this next part of the video we go through on the charts, I will demonstrate to you why this bit here is happening, why you're actually losing. We're going to zoom in on this area to find out how you're actually losing your trades. So instead of this, as a supply and demand trader, this is the basic concept of what you're going to learn. You're going to learn as a supply and demand trader, this leaves an area of demand where you're going to look for your entry to go long, not at this area here where you've actually taken those losing trades. We're going to more depth on the charts why this works and this doesn't, and why you need to start looking at the markets in a different light compared to support and resistance. Now there are times when you can look at a support and resistance and use it in your favor, and sometimes it won't. So you have to still understand that support and resistance can actually work. So let's now go into an area on here now, what this can look like. I'm going to draw this line here. This is our main area of previous resistance became support. What I mean is we can see a bounce here, so a major area of resistance. And at this point here, when the market comes back in, is an area of support. We're looking for a trade. Now I'm going to go through in a moment to show you this swing. There in fact is a higher swing to the upside that pulls back. So what we're seeing is the market's breaking through. We have a first test where we think this is a good valid area. The market continues up, making new swings, and then we see the market coming back down like this. And what is that actually showing you on a higher time frame is we have a swing like this and pulling back. Now all this information I'm now showing you is available to you in one of my videos, which is the trends within trends in trading Forex. I'll leave a link above now so you can go through and watch that first video of a 3-part video series which goes through to show you how to take a confirmation entry with supply and demand approach. That's a great 3-part series. I do suggest going through and watching that after this video. Now at this point in the market where you're thinking, well, hang on a minute, the market of resistance acted as support once before, it's going to do it again. And that's where many traders are getting it wrong, and that's where they're getting stopped out. And you're finding you're buying in here, the market goes up your way temporarily, then all of a sudden the market will drop down like this, take out your stop you've placed, and then you'll see the market go higher from there. Now I will show this on the price charts in a moment, but this idea is to help you understand when somebody has bought up here. Say you're buying from this area in the market, where are you logically going to place your stop? You're going to place your stop below this low. So most retail traders are going to go. And as the market goes higher, you're going to move your stops. And even people who've bought from down here have a stop loss. They're going to move their stops to here perhaps. And as you can see, as the market comes down, it's removing those stops. This is what gives you the market. As it keeps coming down, it removes stops. And when we come back to this area, it hasn't yet removed any of these stops in the market. Now these sell stops are going to be triggered when they push the market back down. They're not only going to bring in what? They're going to bring in more sellers to the downside. They're also going to remove all of those stops but still sit back here. And then they've got more orders to go long. And you've guessed it, what sits in this area where the market comes down is an area of demand. And it's this area where you want to be buying in the market, not off that area of support and resistance. So I hope this first part of the video is helping you to understand the core concept between support and resistance and supply and demand, and why you need to start looking at the supply and demand technique instead of support and resistance. Now we're going to go over to the price chart and go through this again in a lot more detail. So if you're not quite sure, I do suggest continue to watching this video so you can see where you're making those mistakes and how you can avoid making that mistake, as I did when I started trading and start learning supply and demand. So now we're going to go over to the price charts. First off, we're going to go over to New Zealand USDs. Let's go on to that pair. As you can see, I have the 4-hour time frame, and what we're going to look at first is this area. We see the market pushing up and we're coming back for a buy trade. Now, as I said in that first part of the video, how it is manipulated by those stops in the market. Now, if you was a support and resistance trader, you must probably be looking at this area to take a buy from. You can see there's a previous area of a resistance. It broke through, became an area of support, went higher, pulled back, and we had this big candle with a long wick to downside as an area of previous resistance became support. Now this is where typically, let me just actually draw a line there for you to see. So this is our area. This is where you can see first time we had a manipulation on that first test. We went lower. We'll go closer into that in a moment. And then this second time we went even lower and left what? A nice looking pin bar. You probably would have either taken an entry on the break of the high or an instant entry, you'll stop the pin bar. What happened on the very next candle? We saw a big bearish drop to downside. Now, if you're now looking at this and having that aha moment, you're starting to understand why you're losing in the market. Now, let me show you as a supply and demand trader where you've been looking for a trade. This, in fact, is our last area of demand. This is where the market rallied up, it found some resistance, but it broke that high, dropped and rallied higher, pulled back and rallied higher again. Now, where you have been looking for that trade here with a support and resistance trader, let me remove everything off the chart. This, in fact, would have left you an area here of demand. And that's what we see. We see the market coming back into demand, pushing higher once again. Hopefully you're beginning to see the differences between a support and resistance trader. So this area here, why would you have lost? Let me go closer in. Now what do you see? As a support and resistance trader, you're seeing the market coming back for the first time on that bearish candle to test it. And this might be where you're looking for a trade on a lower time frame. So what we're going to do is go down now to a lower time frame. Let's mark this area off. Let me demonstrate to you the differences. Let's go to a 15-minute time frame. And this isn't a chart that I've cherry picked. I've just gone on to this pair to have a look and see if we can find these problems. Now, this is what happens. The market comes back to test that level with a nice rejection. The market goes up. You're in that trade. You've taken a buy here. Let me just remove this line now. You've taken a buy off this position. We've gone up. Removed that previous high. Then what happens? The market comes all the way back, and look how long it takes to come back. Removes that low. The market comes all the way back, removes that low with one candle pushing down. Let's zoom in on that area. I'm going to have to remove that line. Let's just zoom in now at that zone. This is that area. Zoom right in so we can see it. So as you can see, the market makes this low, breaks it with what? One candle, and then boom, there's the movement higher. Now, as I said and went through previously on the higher time frame, we knew this was an area of demand we were looking for a buy, not an area of support and resistance. And that's why you're losing on many occasions. That's why a support and resistance approach is going to be better for you. Let's take this area of demand that I drew here before. Now, when the market came back, we made a swing pullback into that area of demand. Now, this is the crucial part that I went through on that whiteboard. As you are a buyer from here, let's say you've already bought down here for some reason, this is where you're going to place your stops, below these lows in the market. Okay, and that's what you're doing. The last area you may have placed your stop is here. So the market has sell stops sitting below these lows. So when the market drops down with this big bearish candle, what's it done? It's removed your stops. Again, what is this big candle with a long wick to downside doing? It's removing the stops. And that's why you see the reaction coming back up. This candle was nothing but a stop hit. It was a stop run. Basically, run the market down, remove those stops, pushed it back up to pick up more orders and to bring in more buyers at that key level of previous resistance became support. It knows, or the banks, the traders, they know that the market's here. People are going to see that pin bar. A retail trader is going to look to buy it. The market goes higher. It brings in those buyers and then drops through them and stops you out straight away. Pushes lower. Now this is key. What I was trying to show you before. This is the last area where the markets have got stops. Do you think it's a coincidence the market comes down here and stops right above this key low? Of course it's not. This is where those stops are sitting from the first buys from down below. And what the market does, it pushes up, brings in a few more buyers, and then it pushes the market back down, stops all these buyers out. It then stops these stops out, pushes deep into this area of demand, and then we see the move higher. Now there is in fact a trade that you can see that I've taken on this pair. That's on my other channel. I'll leave the link above now so you can go through and watch this trade I took and where I took my profit on this trade. It's understanding how these markets move is going to help you to become a much better trader. So this is a supply and demand approach, and I hope you're beginning to see why supply and demand is going to work much better for you in the long run than support and resistance. As a support and resistance trader, you're looking at this area. I've just gone through this area, identified how you would have had a losing trade with the use of support and resistance. Again, if I just bring this chart back to that one wick candle, you can then see and identify this is your area of previous resistance. Look to the left, it acted as a resistance before. It acted as a resistance, it dropped off, it then broke through, came back, retested it, came back, retested it with this big candle. It's this candle here where you would think, I know, we can go for long now, breaking that high. And what happens on the next candle? boom, it takes all those stops out. So that is the differences between support and resistance and supply and demand. I hope you can take away from this video the importance of understanding reading the price of the market, with understanding the way the markets move and manipulate you out of your trades. The banks know where your stops are sitting. They can see your orders. We don't have that information, but we can see from the footprints on the chart how to read the flow of price. Now, if you have enjoyed this video today, give me that thumbs up. It's going to help me to know to continue to do these types of videos to help you to learn with supply and demand. Now, if you're still here watching this video, I thank you for watching to this point. And if you watch in a moment, there'll be another video coming up for you to progress to learn with supply and demand and how to finally find those profits in the markets that you once couldn't